All right, we're going to go ahead and get started. I'd like to welcome you to our latest webinar that's part of our AUSii series. Tonight, we are following on from our very well-received hydrogen seminar last December. Tonight, we're going to talk about hydrogen 2.0, the hydrogen transition. I'm glad that you could all join us tonight. A couple of housekeeping things before we begin. I am going to mute your audio and video throughout the presentation so that our speakers can have the full their full audience. If you wouldn't mind making sure that those stay off, that would be terrific. At the end of the session, we are going to have Q&A once all of the presentations have taken place. That will actually take place through the chat tool. So if you're listening to someone and you have a question, please jot that into the chat tool. And if you wouldn't mind putting the person's name first at the beginning of who that question should be directed to, that would really help with our moderator for the evening and help us direct the questions more accurately. So in order to also to let you know that this is being recorded, so you will be able to have access to that after the event. I'll send out an email with a link to that, and it will be housed in our webinar library where all of the other AUSii series recordings are if you want to check out the latest or anything that you missed. I'd now like to hand over to our one of our board members, Colin McHattie. Colin has been instrumental in pulling this together. He's done a fantastic job of finding our speakers and working with our team. And he is also the Director of Technical Assessment for Halliburton's Integrated Asset Management Group, and he's based in Houston. And before I let Colin speak, I also want to just say a big thank you to our sister chamber, the Australian American Chamber of Commerce in San Francisco. Dawn Lillington has been fantastic with her support, and we hope that you all enjoy it if you're a member from the San Francisco group. So thank you. Over to you, Colin.
Thank you very much, Avi, and welcome everybody to the webinar. The Australian American Chamber of Commerce in Texas and San Francisco is a non-profit organisation committed to fostering business relations between Australia and the United States. And indeed, our mission statement is connecting Australia and the US through business, education and culture. And I believe today's discussion will certainly meet all those objectives. Let's talk hydrogen. We're going to provide you with an up-to-date assessment of the green hydrogen developments and techno-economic viability of those developments in Australia, the US and globally. And without further ado, I'd like to introduce today's moderator. Welcome Fergus Smith, who's based in Singapore. He's a partner with the global law firm White & Case, and is also the coordinating editor of White & Case's Global Hydrogen Guide. Fergus specializes in the acquisition, development and financing of energy and infrastructure projects, including a dedicated focus on renewable energy development around the world. He's currently advising on market-defining hydrogen supply chain projects in the Asia-Pacific region. I'll hand it over to you, Fergus, and welcome.
Good evening and good morning, everybody. Excellent to have you join us, and thank you very much for taking the time. We've got a great panel for you this morning, which we hope you'll enjoy. What we are witnessing is really a groundswell of activity in the pursuit of the hydrogen economy. As Colin mentioned, White & Case produce a global hydrogen guide, which is prepared by a large team of lawyers tracking the regulatory incentives around the world. And what is striking about what we're identifying is that there really is significant interconnectivity of action and collaboration across regions. Hydrogen is perhaps necessarily a global ambition, and one where coordinated action is fundamental. This session is timely, with COP26 as our background, hydrogen having been identified as one of the key technologies of the breakthrough agenda in Glasgow. We trust you'll find this timely. The panel today is fabulous. We'll be starting off with Dr. Hans Hermes, who is the Global Head of Clean Hydrogen at Worley. We'll then follow with Gero Ferrugio, who's the Head of Australia and Global Renewables at Rystad Energy. Thirdly, we'll be having Leigh Kennedy speak, who is the National Cluster Development Manager at NERA. And then finally, to bring it home, we're very happy to have Dr. Vicky who's the engagement and strategy lead at CSIRO's hydrogen mission. So to kickstart us, Dr. Hermes will be speaking on the way to a hydrogen market in 2050, boosts and barriers, an overview of the broad market drivers that we can expect in this sector. Dr. Hermes is an engineer by training, has a PhD in energy economics, and has worked on energy projects across a wide range of countries. We welcome him. Thanks very much, Dr. Hermes.
Yeah, thank you very much, Fergus, for this introduction. And it's an honor for me to be invited to the Australian American Chamber to speak here. But it's also being based in Berlin, that means Europe. It's also a pleasure for me to speak here because this is a global market, and this will be based on collaboration and also being curious to understand how others are progressing and organizing, and yeah, collaboration on standards and trade and everything will be very important in this. So thanks a lot for that. And I would like to share with you on the next slide the views in 3 parts. After some introductions, let's have a look at the future market, how that looks like, what's the volumes and the demand, and then come to the boosts and barriers that and the barriers to be removed to make this happen. So why do I talk about hydrogen as part of Worley? So Worley has an ambition to not only anticipate, but also lead energy transition and sustainability. And that is shown by now we are making 30% of the turnover from projects and works in sustainability and energy transition. And that is also becoming visible in the projects that we are doing. We are involved in more than 105 hydrogen projects, the largest one beyond 30 gigawatt. We are involved in more than 780 wind projects worldwide, 360 solar projects, and almost 250 renewable fuel projects. So you can see with almost 50,000 people in 50 countries, a real dedication to go that path and walk that way towards a more sustainable industry and world. So hydrogen, and maybe one word, when I say hydrogen, I always mean the group and the family of clean hydrogen, green ammonia, methanol, and synthetic fuels as products. And the idea of hydrogen has always been to reach the last mile to the customer. And you can see to enable large-scale renewable integration, but also to decarbonize transport, industry, energy use, building and heating sector, and power, and also as feedstock for chemical industries, for example. And how to reach these sectors that cannot be decarbonized with renewable electricity, that is hydrogen and hydrogen products is the means for that. That means that we have a high momentum now in politics, but also in industry to walk that in that direction. But this also means that we are facing high demands that come from these sectors. And just to give an example, and this is a calculation that you can do in every country, but for example, in Germany, if you want to decarbonize all the truck fleet, only the heavy truck fleet, and you would not do anything on other sectors, and you look at the hydrogen that is available today, we would need to ramp that up by factor 100 to only supply the trucks and don't do anything with other sectors. If you make the same calculation for the building heating sector, you are ending up with a factor of 830. And I'm sure that there's a similar calculation for other countries. So that shows a bit of the magnitude of the things that we have in front of us. And all these sectors have high demands. And to sum that up for the world, that is shown on the next slide, on the future demand. On the left side, you can see the hydrogen demand today and growing until 2030. And this is growing with all the sectors to more than 200 million tons worldwide. And what we can see on the right-hand side is that these are the projects that we have in the pipeline, and also the projections of projects that we know of in 2030. And what we can see beside the many announcements that we have and the interesting projects that we have, and also the giga projects that have been announced, still we are covering kind of 10% of what we need to cover all this demand. So that means we will need many more projects, and we will need many more market players, and we need more transport and infrastructure to provide for that. And then the question is there enough money to do that? And on this, we can see that it's two messages. First, it is doable. It is a big amount of money, of course, but comparing the planned energy scenario and the transforming energy scenario, you can see that it's big numbers, but it's doable. It's not the double amount or so. So money is not the bottleneck. The investment willingness is there. A lot of money is needed, is available. But the question is how to trigger this amount of capital for investments. So what is driving the investments? What is hindering the investments, and what are the boosts and barriers? So that here is our homework list for everyone, let's say, for governments and associations and industry partners. And you see on the left side, the boost that is a technology development. It is pushed by high demand. It is happening already now. For example, we see increased number of electrolyzer stacks. The number of stacks in electrolyzers have tenfold from 2000 to 2010, and again tenfold from 2010 to 20. So that is not a bottleneck. And also we see current works and patents being prepared for significant improved performance and energy efficiency in electrolyzers, which will change the whole energy balance of such a plant. And we see a lot of potential for innovation along the entire value chain in optioneering and optimization, etc. And in parallel, the markets are developing. There's a high demand by off-takers from all sectors, as we have seen. On the other hand, there's also massive potential for clean hydrogen supply from emerging markets. Just to name a few, we have solar and onshore wind, big potentials in the Middle East and North African region, in Australia, in Chile, for example, Latin America, but also other African countries are now coming into play. What is also helpful is cooperation, and that's also needed. It's stakeholder engagement and partnerships and common governance and risk management, which means it's bilateral agreement between countries, between industry partners, and also in the way of working when it comes to projects. The common governance and risk management means that partners from different sectors that have different risk perception, different standards, different ideas of IP and everything need to collaborate and work together, sometimes first time. And that's something that we experience. That is also one of the challenges to get this done. And now to the hot topics, and that is three areas: regulatory requirements, infrastructure, and finance. And on regulatory requirements, we need an enhanced market pricing for carbon, and that will drive business cases into the right direction. We also need to achieve that we have emission limits, because this is an incentive for fuel switch. And we need to remove levies and taxes on green electricity in some countries where we are faced with very high electricity prices. And as we all know, this is driving the levelized cost of ammonia, green ammonia, or hydrogen in the end. So that needs to come down. And also we need to implement trade facilitation instruments like common certification schemes, standards, guarantees of origin, all this. Then the next, we need infrastructure. We need investments in more storage facilities, pipelines and distribution networks. Harbors need to cooperate. That's also happening right now, but we need more of this. We need to reuse, of course, existing gas infrastructure. This is quite low capex compared to the whole sector and gives the market a lot of stability. And for finance, what we need is also trade markets and platforms in public procurement, for example, contracts for difference. What we, for example, need to trigger all the developers that are not yet in the play, because they have bank finance projects, they need an offtake price that they can calculate with. And for that the transition period, it's needed that we have platforms where you have a fixed offtake price for hydrogen. And the other thing I would say is that we need to fade out quite quickly the direct subsidies into projects and replace that with a good regulatory framework where the private money can go into projects directly. Because short term, this is good to trigger off to kick off the market, but mid and long term, that would be a very, very expensive taxpayers' monies experiment. And I think it's not enough. There's not enough money there to push all the projects with direct money injection. So to finish off, I would like to steal, so to say, a statement from International Energy Agency, from Fatih Birol. Couldn't say it better. Governments need to take rapid actions to lower the barriers that are holding the low carbon hydrogen back from faster growth. And that is important if the world wants to have a chance to reach the net zero emissions by 2050. Thank you very much.
Thanks very much, Hans. Our next speaker is Gero Ferrugio, as I mentioned, the head of Australia and Global Renewables at Rystad Energy, who will be talking us through or taking us through a status review of hydrogen projects in Australia, the US and worldwide. Rystad Energy is an independent research and business intelligence company, and Gero is responsible for their global renewable energy offerings. Thanks very much, Gero.
Thanks, Fergus, and thank you, Hans, as well, and also the Chamber of Commerce and Amy and Colin for this opportunity. It's great to be back again, presenting on hydrogen. So we'll jump straight into the first slide. So over the next 10 minutes, we'll take a look into green hydrogen and then the global renewable trends that are essential to unlocking the green hydrogen potential. So in this short time, we'll touch on the following takeaways. What has changed since the last time we presented, and how much more can we expect? And I think it's fair to say that no one expected hydrogen to move as quickly as it has over the last 12 months. We'll touch on what causes us to be optimistic and also what we should be worried about. But before we move on from this slide, I expect most of you are familiar with hydrogen and green hydrogen. But for those that aren't, we'll do a quick introduction with this diagram. There's already a global hydrogen market, and that's about 80 million tons per annum. This is almost entirely produced from fossil fuels at the moment. Gas is grey and coal is either brown or black. And if you capture the emissions, it becomes low carbon hydrogen, that's blue hydrogen. And finally, green hydrogen is extracted from water using renewable energy. And this is not new, it was produced way back in the 1930s in Norway. And for the rest of my presentation, we'll be focused on this green hydrogen element. So we start on the next slide with a map of all solar, wind, and energy storage projects over time. And the size of the bubble represents the project capacity, and we've colored them by the different energy technologies. You can notice the shift in scale as the image builds through time. The average project size has doubled in the last 3 years, from 20 to about 40 megawatts, and we expect it will triple by 2025. Historically, onshore wind has dominated, but solar has seen more capacity installed in recent years, and we expect this will continue. So trends in solar and wind are important, as this is what is likely to power most of the green hydrogen projects globally and also drive down the costs to the levels needed to unlock its potential, the point that Hans was making earlier about driving those costs down. But also to note in this chart, on this diagram, some of the biggest bubbles are green hydrogen, where scale is key. So the next map, if we clean up the map to show just the green hydrogen projects, you can see where they are and at what stage in the development cycle they are. So we're tracking 282 gigawatts of electrolyzers globally from 360 projects across 42 countries. And most of the projects are in Europe, but most of the capacity is in the Asia Pacific region. Now, the global average of operating electrolyzers is about 3 megawatts, and we expect this average size will increase by over 20 times over the next 2 years. Now, Australia is home to most of the capacity being proposed, and the charts on the right show the top projects above 1 gigawatts and below the top projects below 1 gigawatts. And just a summary there, ARENA recently awarded about $100 million worth of grants to 3 large-scale projects, and these are about the 10 megawatt size. But other than these, the other project to watch is this one I've highlighted in Bell Bay in Tasmania, and that's with the Fortescue Future Industries logo. And this is likely to be the first major project off the ranks. That's about 230 megawatts, significantly bigger than what we're seeing today. So in summary, we're about 53 large-scale projects in Australia. There's many more of these smaller sub 1 megawatt size, but 53 large-scale ones, total about 76 gigawatts, and the average is about 1.5 gigawatts. So we go to the next slide. we've touched on, I think Fergus mentioned about COP26 already. And COP26 is attempting to limit global warming to about a 1.6 degree scenario. And the chart looks at the respective technologies, comparing the capacity forecast from all the announced projects and the growth needed from yet to find capacity to meet this 1.6 degree scenario. So as you can see, solar will experience the highest growth, but the pipeline of projects falls well short of the 1.6 line. By the end of this decade, 7 times more solar is needed than all the projects in the pipeline. That's all projects operating and planned and announced. So the pressure of today's increasing global activity in renewables has already taken its toll on the energy transition supply chain and the materials needed. And we're saying there's absolutely much more yet to come. So if we look at the chart on the right-hand show, this shows the price increases in the key commodities, with polysilicon prices absolutely soaring, driving up the costs of solar PV modules. Now, shipping costs is another element in the supply chain that is causing really considerable challenges and concern. So for the past 5 years, the cost of shipping modules has increased from ½ a cent per watt to about 3 cents per watt. And that's up 50% this year alone. So the next slide, we look at how these cost increases are impacting project economics. Now, our renewable solution tracks global power purchase agreements. And here we compare for wind and solar, highlighting the average upper and lower quartiles for each year. You can see why solar has been so popular. Its PPA prices have fallen by over 20% year on year, and today accounts for some of the lowest offtake agreements globally, close to about $10 per megawatt hour. Now, using our renewable economic model, we can actually calculate, just still on that slide, that previous one, sorry, we can calculate the offtake prices for each project to break even. And this works out to be about $45 per megawatt hour. The average PPAs are being signed well below the level of the global break-even prices. This is straining margins and rising cost pressures. So this is not sustainable for just solar projects alone. And there are no sign of costs declining soon. The next slide looks on a more positive note, why we should be a little bit more optimistic for green hydrogen. Well, we cannot build out renewables in grids without energy storage, like batteries and green hydrogen. Here we see quite a complex chart of solar farms capture pricing across the grids as more solar gets added to these grids. The impact is worse with inflexible coal-dominated grids like the ones we have in Australia. So, for example, with only 15% solar generation, the power price for solar farms received can be as low as 30% of the average power price for that grid. So this excess power produced will need to be stored or used to create hydrogen. So essentially, to facilitate more renewables in grids across the globe, we need things like storage and green hydrogen. So my final slide looks at the growing green hydrogen sector. Now, the proposed green hydrogen electrolyzer pipeline, as I mentioned, exceeds about 282 gigawatts. And this is pretty impressive, given as most of it was announced since the start of the pandemic. Now, if all the projects identified today break ground, it will only supply about 10% of the forecast demand by 2050. So it requires at least 8 terawatts of renewable power to produce hydrogen, but the hydrogen needed by 2050. This is significant because it's equivalent to almost 10 times all of today's solar and wind generating assets. So we can expect many more gigascale projects to be announced and to emerge for some years to come. So in summary, you see that the average green hydrogen project size will increase by about 20 times over the next 2 years. And today's solar and wind generation assets, we need about 10 times more than that to meet the demand of green hydrogen by 2050, if all hydrogen demand will be green by 2050. And this is significant because it could double the total demand for utility renewables over this period. Thanks very much.
Thanks, Gero. That was great. Super interesting. Our next speaker is Leigh Kennedy, who is the National Cluster Development Manager at NERA, which is the National Energy Resources Australia, which supports the commercialisation of the emerging hydrogen industry. Leigh's going to be talking through NERA's sponsored hydrogen clusters throughout Australia. Great to be talking about clusters in a positive way, Leigh. We look forward to the presentation. Thank you.
Thanks, Fergus. It's often the first question that comes up is the new connotations with clusters. But no, this is the positive note, and thank you for the invite. And I guess just to start off my presentation, it's been fantastic to see the themes through Hans's presentation around the boost. So that yin yang symbol, I want to concentrate on the boosts, and then across to Gero's presentation, which talks about the project pipeline and the opportunities for Australia. Our cluster network across Australia is really around implementing that and how you can create a viable, sustainable supply chain that actually can help those companies build out their projects and activate the demand side. So next slide, please, Amy. So just quickly, NERA, we're an independent non-for-profit. We've been partnering with the Australian government for 6 years, and we're really around joining the dots between Australia's small to medium enterprises, SMEs, technology companies, and how they can engage with project developers to implement technology solutions. I always just like to start on this slide. Gero gave a fantastic overview of what is green hydrogen and how that does play a role in Australia. But I'd just like to remind and reiterate why Australia for green hydrogen or clean hydrogen. It's really, we have the resources, we have the infrastructure, established trade relationships in Asia, and more importantly, we have the smarts. We have people that can get this work done, and we also have some really significant technology companies, SMEs, that we want to be able to export to the world. And a lot of this is leveraged on the oil and gas industry, the mining industry, and the renewables. So many of the US and North American companies have played a role in getting Australia to where we are today. So I guess just on the topic of clusters, it's a really well-known business model in Europe. Clustering really comes down to three things. It's around like-minded people trying to solve a problem in one industry in a geographic concentrated area. So for us, it's getting all the different people across Australia's hydrogen value chain to look at how to solve some of the problems in the Australian hydrogen industry, whether it be on the supply side, the demand side, the moving and storing in the middle, and really how we can get that moving. So if you do cluster well in terms of as a business model, you should have regional economic benefits, better collaboration, more efficient companies, new business opportunities. So it's a great way of actually helping kickstart an emerging industry. So what are we doing at NERA? I like to start at the bottom of this triangle. And what we've done is we've built out and provided seed funding to 15 different regions around Australia. And I'll go into that a little bit more depth later. And what we're doing is not only seed funding them and letting them grow themselves organically and looking at collaboration inside their regions, but now bringing them together in one Australian network and how they can actually share what's going on in each other's regions and help one another, learn from the journey that others have taken, pull opportunities through, push capability across Australia to really try and, I guess, maximise and the opportunity and really shorten some of the time horizons that Gero was posing earlier. And we want to go internationally. We want to create international connections. We have focused on Europe in the first couple of months, but I just put a question there of USA. How can we collaborate as a regional network with the US market and different organizations in the US? So this is really where I want to spend the majority of the time here. As you can see, everyone loves a great map of Australia, and mine's slightly different from Gero's. And where a lot of those bubbles were on Gero's map is where their potential hydrogen hubs are. So those little black dots, and that was provided out of a report from URUP in 2019. So it's a really great synopsis of some of the possible site locations for Australian hydrogen industry. And so we're building clusters in these 15 regions and looking at how we can, I guess, create those networks and ecosystems that can help either the big production companies like FFI, and I guess for this map, just to give you a good example, is Bell Bay that Gero mentioned down south in Tasmania. Not only is FFI there, but Woodside has a potential export project. Origin also has a proposed export project, and Able Energy. So it's a great example of where you could potentially get 4 really large scale projects in a region. And I was there a couple of months ago, and these 4 projects will be next door to each other. So how do you actually create collaborative opportunities, whether it be on shared infrastructure, whether it be on understanding where capability can be shared or pushed and pulled across to really help grow that industry. And there's some fantastic companies in Bell Bay that have been helping Hydro Tas, that have been helping other industries that are looking to diversify into the clean hydrogen space. So Australia has the smarts, we have the capability. It's now how we unlock and I guess get those companies rocking and rolling, and how we can help them potentially get exporting to other markets like the US. Now, the key themes across to the right, sorry, Amy, this is where our 15 regions are focusing. These are the themes. So there are similar enabling themes across all 15, and the ring around the infographic is how many of those 15 regions actually want to work in this space. So you can see there's plenty of collaborative opportunities to work with one another. And these regions don't see themselves as competitors at this stage. They see themselves as helping one another. The bottom 3 are really the interesting ones. These are the applications of hydrogen on the demand side. So whether it be transport, we have opportunities developing between the Mallee in Victoria across to Adelaide. We have a trucking company that wants to decarbonise, does 33 million kilometres a year and wants to flip across to hydrogen. So how can we, as a regional network, help this company through that journey, bring people together to make their life easy to deploy their technologies? Manufacturing applications. Manufacturing, this is Gladstone, great example with Plug Power, a US company partnering with FFI to look at manufacturing electrolyzers in Gladstone, a great example. And the agriculture, how do you use biomass as an input to a hydrogen development, but also how do the farms in that exact same region use hydrogen either with with their machinery or in the actual processing of food. So there's plenty of options and applications in Australia, and we're just starting to piece these together and how we can bundle some of these opportunities up to create scale. So these are some of the collaborative projects that our network's looking at, but I'm conscious of time. We might just skip through this one. Thanks. And this is one I want to highlight, high capability. This is a platform we've built where we want to promote Australian hydrogen equipment, technology and service firms, Australian HETS industry to the world. So please feel free to look on here and you can identify companies that want to be in this industry that have capability to share. We are looking at setting up an Australian hydrogen tech supercluster, which is getting the technology companies together to go around the world, become Team Australia for the hydrogen industry. And it's not about the molecules, it's around this HETS industry and how we can actually export more than just molecules in Australia. And I'll just leave this slide here. I always finish off with the presentation with this slide. It's really the one-stop shop to look at what's going on in the Australian hydrogen industry from projects as well as policies. So I'll just leave it there. Thanks, Fergus.
Thanks very much, Leigh. Much appreciated. Before I introduce the next speaker, if I could just remind people that you should feel very welcome to leave questions in the chat box. If you're not familiar, there's a little icon at the bottom of the screen that says chat, which will open up the box, and feel free to post a question there. If you are more comfortable, you should also feel very welcome to send me the question privately. You can do that by changing the to feature of the chat box at the bottom of the page, and you can ask that question anonymously. Feel free to do so. Our final speaker, very happy to have Dr. Vicky, who's the Engagement and Strategy Lead at the Hydrogen Mission of CSIRO. Probably doesn't require the explanation, but the CSIRO is Australia's national science agency and innovation catalyst, and as the son of a scientist, a source of great pride to many Australians. Dr. Vicky, please take it away. Thank you.
Thanks very much, Fergus, for the introduction, and thanks everyone here today and to my fellow panel members. Also, Leigh, always appreciate the high resource plug. Here to just help wrap up the preliminaries and get us into the discussions. So a short introduction on CSIRO, but really appreciate Fergus for taking us through that. Maybe just a little bit on the hydrogen industry mission. It's part of the missions program in CSIRO, announced last year, about a dozen in development, a few launched so far. They are all large-scale scientific and collaborative research initiatives with partners, and the focus is on tackling the types of challenges that no one organisation can solve by itself, and certainly hydrogen is one of these. So it's probably fair to say that most of us are here today because of the buzz around hydrogen, and because of that buzz, there are many people who will be asking, how real is this? When is it going to be real, or is it ever going to be real? And the fact is that currently, while there are mature hydrogen technologies that can be used commercially, in the absence of incentives, using clean hydrogen is just too expensive compared to existing fuels or technologies, many of which are fossil fuel based. So then the question is, at what point could you reasonably expect clean hydrogen to be seriously considered as an alternative? And this is the backdrop behind these economic stretch targets. Many countries have announced them. Although hydrogen is only one of a number of low emission technologies, the closer we get to these stretch targets, the more likely it is that it does become a viable alternative. So in Australia, we have H2 under 2. That's $2 or less for a kilogram of clean hydrogen at the start of production. In the US, it's reducing the cost by 80% to $1 for 1 kilogram of clean hydrogen within 1 decade. And the analysis that sits behind this work, done by CSIRO and other consulting firms on the Australian side, it supports an argument that these cost targets are a key step to helping unlock new markets for clean hydrogen in a range of applications. So an important first step. And this here from the IEA shows globally where we are now and where we need to be. So Gero mentioned the fossil fuel production being the most common way at the moment. It's currently the lowest cost way to produce hydrogen in most parts of the world, generally sitting around 50 cents to $1.70 US per kilogram. As a low emission technology option, where we are at now with renewables, producing hydrogen is around 3 to 8 US per kilogram. And Hans mentioned electricity costs in his presentation. Gero mentioned the pricing pressures. We really need to consider this in relation to hydrogen production cost. It makes up renewable electricity costs make up 50 to 90% of the total production expenses. CSIRO's own price sensitivity analysis found that a 50% change in grid electricity prices would result in a 30 to 40% change in the levelized cost of hydrogen. So essentially, if the target reality here is to have widespread commercial deployment and offtake of clean hydrogen over the course of this decade, we're going to need quick and significant reductions in the production costs to bring it down to those announced target levels. If not that, some other mechanism that makes clean hydrogen the more attractive option. And this slide here shows point-in-time excerpts from a dynamic tool that we hope to be releasing in the next or maybe three to 6 months, and it can show the likely year, or roughly the likely timeline that hydrogen production can reach that H2 under 2 target. And it does this by using different clean production technologies under different energy inputs and capital assumptions. I've used here PEM electrolysis. There will also be AE alkaline, SMR steam methane reforming, coal gasification with CCS. And it's part of a new modelling resources module that we're developing. So associated with that are the different applications where hydrogen becomes cost competitive to displace the incumbent fuel. And you might see different cost competitiveness graphs, ordering the applications differently. It all comes down to what the comparison factor is. Ours here shows just for fuel replacement, not the whole technology. McKinsey shows, some of the applications ordered in a different way. But the key thing here is the blue line. It's getting the cost down, seeing, roughly when this will happen, and tools like this, I think, will help to visualize the impact of different production pathways, and also the impact of those different inputs, such as electricity and gas costs and capex costs, and this can help drive decisions on research, development, and innovation investments. So we looked at production cost, but of course that's only one part of the equation. The landed cost, or cost to the user, is critical to uptake. And from an RD&I perspective, identifying and developing breakthrough technologies will be important to step change benefits. And there's a report there that you can refer to for a little bit more detail, goes into where the emerging technologies are in this space and also mature technologies. So as with any value chain, reducing processing steps, removing the need for processing altogether will reduce costs. And looking at storage and distribution and utilisation is going to be an important part of the whole picture for hydrogen deployment as a reality. And some examples here can include eliminating the ability having the ability to use low quality or wastewater inputs without pre-treatment in hydrogen production. Under direct carrier utilisation, something that's being explored is the use of ammonia, not only as a carrier, but in direct utilisation rather than having to extract out the hydrogen. And an example there that's been explored is as an alternative to marine diesel. So difficult to predict the timeline of these developments, but RD&I on these storage technologies and utilisation technologies, particularly in large-scale, hard-to-abate industrial settings, are going to be important. And a little bit of work can be done here, similar to hydrogen production costs, to see when this might happen. This here, just second to last slide, just a measure of evolution of our RD&I activity. Hans touched on patents in his talk, and as expected, with that strong emphasis of hydrogen production, really strong outputs in publications and patents over the last decade. Marrying this up with having production having the most tangible impact on hydrogen technology cost competitiveness, and as the industry develops, we can focus to landed or user cost, and you might expect the increasing RD&I intensity under storage and distribution and utilisation. And just a side note here of where Australia is ranked 3rd for citation rankings in production, but we're actually ranked 1st in both storage and utilisation publications. Where we fall down is on the patents. Like we're a minuscule part of the patents. There's a lot of work that can be done there to convert. The top countries are, we're sitting behind China, Japan, US, South Korea, Germany. There's a lot of work that can be done here to help convert some of the great work that we're doing in publications. And just finally, a real world example of CSIRO's work and our efforts to boost RD&I on storage. Gero was a startup company that was launched earlier this year in June, backed by Main Sequence, a deep tech investment fund, and also Ampol. And this company, this was formed under a model of identifying a global challenge and bringing together science and industry to solve it. So hopefully that helps with a taste of where the opportunities are in RD&I to realising hydrogen's potential, a little bit on where Australia can make a difference. And we'll go now, I think, back to Fergus to help us with discussions. Thanks.
Excellent. Thanks very much, Vicky. Much appreciated. So we've had a flow of questions here, which is great. I might start with a question about the trajectory of travel. We see that there is a big gap to make up in terms of the current cost of hydrogen and the need to bring that down. Gero, if I could go to you, do you have a view on whether a strong hydrogen current economy can emerge without strong government incentives? And I guess a related question, will China play a catalytic role like it has done in other renewable energy technologies?
Yeah, look, when I get asked this question, I think I look back at other emerging technologies like offshore wind. So offshore wind is probably one of the fastest, most excited growing renewable energy technologies out there. It wouldn't survive without incentives. The offtake needs to be in some point 4-5 times higher than conventional onshore wind or solar to make it economic. So it's very much the same with hydrogen. I think Vicky had mentioned in her presentation, you need some sort of subsidy. I think we estimate around about 75% of subsidy right now to get projects here in Australia under that $2 mark. So it's certainly it relies on it, and in particular to unlocking that potential in the short term. I would say that, and as Vicky said, the majority of that cost is into the power side, and that was coming down, but certainly the headwinds are changing now, and there's a lot of increasing cost pressures on renewables, and that is the big challenge. And I think we certainly need some incentives to kind of combat that. And to answer your second question, actually, one area that probably is moving faster than most is China. Certainly in our discussions with people in the region, they claim to be producing hydrogen at that $2 limit right now. They're certainly capable of driving down the electrolyzer costs. You need 3 pillars for clean hydrogen to be cheap hydrogen, and that's the low cost electrolyzers, the low cost power, and then the high utilization rate. And in terms of low cost power, we have that. We see that in the Middle East. It's well placed to produce that really cheap solar, those lowest offtake agreements where. So we've got the power at the price levels needed. Where the Middle East falls down is that you can't rely on solar alone. The utilization would be too low. So that's why you need a combination of solar and wind. And then that's when Australia really comes in to its strength there. Not only does it have all the great things that Leigh mentioned in terms of those trade relations, that long history of trading gas, but it also has the resources, the ability to produce solar and wind at scale, at gigawatt scale, to produce this hydrogen need. And that's why we're in very, very, very strong position here. Other thing I've mentioned, just to close on that, is that Europe is obviously making a lot of moves on the incentive side. So these projects tend to be a lot smaller. And again, they're looking at this offshore wind for their scale. And again, it's all driven by incentives. So the incentives, certainly the activity is stronger in Europe than anywhere else.
Thanks, Gero. And a question in relation to inbound investment from the US into Australia. I might send this one to you, Leigh. What sort of interest are we seeing from US investors in Australian hydrogen-related startups, small businesses, SMEs, and in particularly the Tasmanian project in Bell Bay? Interested in your thoughts.
Yeah, great question, Fergus. And the short answer is we want to see more. And at this current stage, with I guess the hydrogen technology space being in its infancy, we're seeing some of the companies, Vicky highlighted Endura that's just spun out. There's a few other companies like Hyasta, Hazer, Labo that are all just coming out of either being spun out of universities or are coming out of other companies where they're just finding their feet. So, and a lot of them are, so we've had conversations, with about 20 or 30 companies, and a lot of them are looking for that next wave of investment. So whether, some of them have gone to the ASX already, the stock exchange, others are looking for strategic partners, and whether that be corporate venture, corporate VCs, and there's lots of different partnerships out there now around the world, like AP Ventures, with different types of entities partnering up to create these funding opportunities. So if there are companies out there looking for Australia, please speak to the Austrade guys in Texas or other parts of North America, and happy to have those discussions. In terms of Bell Bay, a lot of the investment in Bell Bay has been on the production side, and looking at how you can actually get some of those big companies in and start driving the supply side. The interesting thing when we talk about incentives, which sometimes gets dropped off, is on the demand side. How are we actually helping? And it's not necessarily incentivizing or giving funding to people to flip technologies, but it's also just setting the right regulatory frameworks, giving the industry the framework to actually undertake those commercial decisions. So in the Bell Bay, I think we're going to see a lot of interest around the demand side in locally, whether that be the smelters, mobility, but there's lots of opportunities in Bell Bay and across Australia. It's just understanding and I guess managing the risk appetite of the investor with what's here in Australia, and happy to be part of those conversations with anyone on the call.
Fantastic. And perhaps a question here for perhaps Hans and Vicky, interested in your thoughts. What, in terms of timescales here, where we will see a real ramp up of hydrogen playing a really key part of our economies, what timescales are realistic until we start to see hydrogen approaching parity?
Shall I start, Vicky, maybe?
Perhaps to you first, Hans. Thank you.
Yeah. The interesting part in this is that it's twofold. I mean, if we talk about the projects that we see nowadays, and if I take the example of Europe, these incentivized, so to say, they need subsidies to be feasible nowadays. And there is restrictions in terms of showcases that you can have. What we see today is, for example, projects like Rystad and BP working together. This is one that we are implementing with offshore wind power into a refinery to deliver hydrogen. That's a sweet spot that works. And then it depends on how the CO2 price and incentives around that are developing. But for the international, and that for me is another scenery, the projects that are now popping up in all parts of the world where you have good conditions for sun and wind, I see them already at parity. And if the sooner the logistic question and the shipping is solved, and that will come, then we are not talking about decades, but we're talking about the now.
Vicky, we've actually had a specific question for you in the chat. If you had to pick one significant technology breakthrough required to make hydrogen competitive across the whole value chain, what would it be? A big question.
Yeah, so I think this does kind of come off the what Hans was saying, and also your previous question about timelines, and maybe the whole question as well. Do we need subsidies? What incentives? And the thing that we've been looking at on what part we can play is really helping to build the demand. And you've seen in many industries, there is production there, but it's limited as to the offtake. So, where is the incentive to produce and make it cheaper to produce if you're not going to be able to also have users of it? So I think something that could really make a difference here is in that utilization part of the story. It is in that hard to abate sector in heavy industrial use. And one thing, one important factor for this is, we've got cars, we've got vehicles, we have some other things, but, electrification is a pathway for many of those things. Yes, it can help with decarbonisation, but there are other pathways, mature pathways that can be used. Where hydrogen can really help and we can help drive that large scale production is in, looking at the exploration of that heavy industry usage in green steel, in green aluminium, in green ammonia, and from an RD&I perspective, where this is being explored is in CRC. So these are cooperative research centres between industry, really understanding that they have decarbonisation pressures that they need to look at, pairing up with some of the best minds in research, multiple research organisations, the HILT CRC, Heavy Industry Low Carbon Transition CRC, a key CRC over the next 10 years. It's got 10 years of funding to make really big changes here. So that's where I would put my investments in. It's hard, it's high risk, but if it pays off, it's going to make a really big difference in being that big offtake to drive down the cost and making this much more of a reality.
Fantastic, Vicky. That's great. And I think we've got 1 minute or so left, and there's a further question about what role does project scale have in the challenges here, and what lessons can be drawn from the LNG sector. On the legal side, I think we see a lot of parallels between the way the challenges of the early phase LNG sector were met, the types of structuring and bankability assessments. It's all very familiar to us in terms of how we make this work. How do we fund these projects around the world? And so, from a legal perspective, what we're seeing is a lot of connectivity and parallels and lessons that these challenges have been solved before in other sectors. But in terms of the scale question, Gero, your slide indicated that is the direction of travel here, and I guess fundamental to making all this come together.
It is, because it's basically a race to the bottom. Yeah, because the US is a fantastic market to export to, but it's well capable of actually producing its own green hydrogen. It has the lowest PPAs and the lowest PPAs globally. So, and it's similar for Japan. I mean, Japan doesn't have a huge amount of opportunity to produce it other than, say, offshore wind. But if it decides to incentivize that, it can produce itself, supply itself. And that's a huge potential demand area for Australia. So where we can build those huge projects, bigger than anyone else, drive those costs down, the power costs down, the electrolyzer costs down, and of course, that high utilization, then those export markets are open to you. And just one other parallel that you mentioned also with LNG is if we unlock all the projects in Australia, if they all go ahead, it will attract this more capital investment, over $400 billion, more than all the LNG projects in Australia. And of course, we're the biggest exporter of LNG. So what a positive note to lead on. And again, but I echo all the points of the panel there, Leigh and Vicky, in the sense that domestic demand is absolutely key to unlocking this. Certainly, they're doing a great job. We need to see more. We need to see those incentives that we see that's driving the investment in offshore wind and technologies like emerging technologies like that globally. And we just haven't seen enough of that yet in terms of those financial incentives.
That's great, Gero. Thank you very much for that ending on a positive note. And thank you, everybody, for joining us. That's been a really great panel. If I could hand over to Amy to wrap it up. Thank you very much.
Thank you. I want to take the time to thank everyone for attending tonight. We appreciate you going beyond your work day. I want to also thank all of our speakers from across the globe. It was an amazing and very insightful session, so we appreciate all of your expertise. We will share those presentations with those of you who have attended. And if you need their contact information, that will also be in the thank you email that we send. So thank you again for joining us. We appreciate the support of the AACC San Francisco. And we also would like to invite any of our participants to join us here in Houston for our annual AUSii conference, Australia-US Innovation and Investment Conference, which will take place on December 1st. And we do have both virtual and in-person ticket options, and we have an amazing program, so you can check that out online. So thank you all very much. Thank you, Fergus. Thank you to all of our speakers. We appreciate it. And thank you to Colin.
Thank you.
Thank you.